Sunway Berhad is a Malaysian-based investment holding company, and Sunway Berhad also operate in property and construction. Sunway other business division include quarry, budi material, trading, manufacturing, hospitality and healthcare. Sunway Berhad was established in 1978, where they have a track record of excellence for over 40 years. The company vision is to be the ASEAN model corporation in sustained development, innovating to enrich life for a better tomorrow. And the company mission is to empowering our people to deliver enhanced value to all stakeholders, embracing sustainability in their business, processes and decision. Lastly, attracting and nurturing a talented and progressive workforce for the digital era. This company consists of 9 main business divisions spanning over 15 locations worldwide, especially in Asia. It was guided by their founder and the chairman. Sunway Berhad owns 54.6% of Sunway Construction Group Berhad, the largest construction company in Malaysia by revenue in real estate investment trust. Sunway currently owns about 11 billion of assets under management in our property investment and real estate investment trust division, and has delivered more than 31,000 homes in integrated development in Malaysia and development in Singapore, Australia and China.
Okay, next is financial ratio. There are 4 basics of financial ratio. The first one is liquidity ratio. Liquidity ratio measures a company's ability to pay debt, obligations, and its margin of safety through the calculation of metrics including the current ratio, quick ratio, and operating cash flow ratio. Next is activity ratio. An activity ratio is a type of financial matrix that indicates how efficiently a company is leveraging the assets on its balance sheet to generate revenues and cash. The third one is profitability ratios, which are used to assess a business ability to generate earning relative to its revenue, operating costs, balance sheet asset, or shareholders' equity over time using data from a specific point in time. And the last one is debt ratio. Debt ratio is a financial ratio that indicates the percentage of a company's assets that are provided via debt. Okay, so for the ratio analysis on 2017, for liquidity ratio, the current ratio is 1.14 times. For the quick ratio is 1.05 times. For leverage ratio, the debt ratio is 39.44%, while for time interest earned is 5.91 times. For activity ratio, the inventory turnover ratio is 2.03 times, while the total asset turnover ratio is 0.54 times. Profitability ratio, the net profit margin is 20.60%, while for the return on asset is 3.62%. Next is the ratio analysis on 2018. For liquidity ratio, the current ratio for Sunway Berhad is 1.01 times. For quick ratio is 0.80 times. Next is for leverage ratio. The debt ratio is 43.34%, while for the time interest earned is 6.9 times. For activity ratio, inventory turnover ratio is 2.05 times, and the total asset turnover ratio is 0.27 times. For profitability ratio, the net profit margin is 13.46%, and for the return on asset is 3.47%. Next is a ratio analysis 2019. For liquidity ratio, the current ratio is 1.03 times. For quick ratio is 0.83 times. For leverage ratio, the debt ratio is 46.2%, while for the time interest earned is 11.67 times. For activity ratio, the inventory turnover ratio is 1.56 times, while for the total asset turnover ratio is 0.23 times. For profitability ratio, the net profit margin for Sunway Berhad is 17.5%, and the return on asset is 3.55%. Ratio analysis is 2020. For the liquidity ratio, the current ratio is 0.89 times. For the quick ratio is 0.62 times. For leverage ratio, the debt ratio is 37.64%, while for the time interest earned is 5.03 times. For the activity ratio, the inventory turnover ratio is 1.25 times, while for the total asset turnover ratio is 0.18 times. And the last one is profitability ratio. The net profit margin is 15.58%, and return on asset is 1.94%. Okay, for the last ratio analysis on 2021, for the liquidity ratio, the current ratio is 1.19 times, while for quick ratio is 0.83 times. The leverage ratio, debt ratio is 26.74%, while the time interest earned is 3.99 times. The activity ratio for Sunway Berhad, the inventory turnover ratio is 1.20 times, while the total asset turnover ratio is 0.16 times. And the last one, profitability ratio, the net profit margin is 12.85%, while the return on asset is 1.39%.
Comparative analysis of Sunway Berhad. A comparative balance sheet is a statement that shows the financial position of an organization over a different period for which comparison is made or required. For Sunway Berhad balance sheet in 2017, the current asset of Sunway Berhad has increased by 0.75%, and the current liability has increased by 5.83%. Since changes in the current liability are greater than the current asset, it indicates that the company working capital can be negative. Secondly, the cash and bank balance of Sunway Berhad has increased by 22.58%. This shows that a positive cash position of the company. For liability and equity, the long term of Sunway Berhad in 2017 has increased by 31.20%. This shows that the company is way too dependent on the external lender, leading to a great financial risk for the firm. Next, the company's share capital has increased by 116.32%. And finally, there is a considerable increase in the fixed assets of the company, which is increased by 9.07% compared to the previous year. For the year 2018, the current asset for the year 2017 to year 2018 has decreased by 1.02%. On the other hand, the current liability has increased by 14.26%, which lead to a high cash inflow. This is because the current liability has increased more than the current asset. Secondly, the cash and bank balance for 2018 has increased by 9.15%. This indicates a positive cash position of the company. For the long-term debt, which is borrowing, has increased by 29.05% in 2018 compared to the previous year. In addition, the owner equity such as treasury share has increased by 190.85%. Finally, there is a considerable decrease in the fixed asset, which is decreased by 9.44%. For 2019, the current asset of Sunway Berhad increased by 21.67% in the year 2019 over 2018, and the current liability also increased by 90.51%. Secondly, the cash and bank balance for 2019 has decreased by 30.34%. This indicates a negative cash position of the company. For the long-term debt, which is borrowing, has decreased 39.50% in 2019 compared to the previous year. In addition, the owner equity has decreased by 61.99%. Finally, the fixed assets such as property, plant, equipment and intangible assets increased by 48.05% and 11.75% compared to the previous year. For 2020, the current asset of the Sunway Berhad decreased by 36.71% in the year 2020 over 2019. On the other hand, the current liability also decreased by 26.93%. Secondly, the cash and bank balance for 2020 has decreased by 1.02%. This indicates a negative cash position of the company. For the liability side, the long-term debt, which is borrowing, has decreased by 6.96% in 2020 compared to the previous year. On the other hand, the owner equity has increased by 39.40%. This indicates that the company is more stable finances and has more flexibility. Finally, the fixed asset increased by 27.23%. This was on account of huge addition made to the intangible asset by the company. For 2021, the current asset increased by 13.22% in the year 2021 compared to year 2020. And the current liability also decreased by 15.63%. The cash and bank balance for 2021 have increased by 25.55%. This indicates a positive cash position of the company. For the liability side, the long-term debt, which is borrowing, has decreased by 22.90% in 2021 compared to the previous year. And finally, there is a considerable decrease in the fixed asset of the company. The fixed asset decreased by 51.84% from the year 2020 to the year 2021. For comparative income statement in terms of revenue changes, year 2017 show an improvement over year 2016 of 15.46%, whereas year 2018 show a little larger improvement over year 2017 of 3.26%. However, the changes in 2019 and 2020 both exhibit negative changes compared to the previous year, with 2019 changes showing a negative change of 11.64% and 2020's changes showing the biggest negative changes in revenue at 19.90%. The revenue turned positive again in 2021, with the largest changes over the previous 5 years being 15.85%. For gross profit, the difference between the year 2017 and 2018 is a positive difference of 14.10% for gross profit and a negative difference of 3.70% for gross profit compared to the year 2017 and 2016. The percentage changes for the year 2019 is 0.58% more than the percentage changes for the year 2018. In comparison to the year 2019 and other previous years, the year 2020 exhibit the most negative changes, which is 29.18%, while the year 2021 exhibit the highest positive changes, which is 20.99%. Additionally, the operating profit for the year 2017 is down to 3.98% from the previous year 2016 operating profit. In 2018, there was a 14.38% decline from 2017, which is also reflected in the change in 2019. There has been a 4.84% decline for the previous year. In contrast to the entire year, the changes for 2020 is drastically down at 56.38%. The only year with a higher increase changes in percent than the other in 2021, with a 41.88% increase over the year before. Profit before tax for the year 2017 and 2018 indicate a positive rise of 2.70%. For profit before tax in 2017, a little reduction of 3.31%. For profit before tax in 2018, for the year 2019, it reflects a positive changes, which is 9.34% and drastically reduced to 40.77%. Finally, in the year 2021, the negative changes likewise declined from the year 2020, which is negative 5.35%.
Now, we move to common size analysis, statement of financial position. From this common size analysis of balance sheets, we had identified that total current assets are slightly decreased for year 2017 until 2018 and starting to rise from year 2018 to 2019. However, current assets of Sunway Berhad start to decline again from year 2019 until 2021, which is the lowest point, which only 31.88%. It shows that low amount of inventories might be the factor which contributes to declining in total current assets. Furthermore, Sunway Berhad total liabilities are decreasing for 5 consecutive years starting from year 2017 until 2021. This indicates that the company managed to reduce its borrowing for short-term and long-term. it also means that the company are paying on its prior debts at a faster rate than increase their borrowings. On the other hand, the company total equity rises for 5 consecutive years. It shows that the company is able to increase their capital from investment and all subsequent of the business. Next, we move to common size analysis, statement of financial performance. From this common size analysis of income statement, we can see that the changes in cost of sales increase. It started to increase in year 2019 and reached the highest point at year 2021, which is 72.77%. It showed that the company did not manage to control their expenses to make sales. Next, the company expenses on distribution and marketing expenses from year 2019 until 2021 has decreased as the company managed to reduce their expenses. Sunway Berhad profit of the year slightly decreased from year 2017 until 2018, but then increased 4% in year 2019. However, it started back to decrease to the lowest point from 2020 until 2021. This showed that the expenses incurred by Sunway Berhad in those years changes, and 2021 has the lowest percentage since the company cost of sales has been increased. Therefore, based on the common size analysis, we can conclude that Sunway Berhad was not able to manage and handle their income and expenses wisely.
Okay, I will start with a ratio analysis from 2017 until 2018. For liquidity ratio, the current ratio and quick ratio on 2017 is higher than 2018. The current ratio on 2017 is 1.14 times, while on 2018 is 1.01 times, which is better on 2017. For quick ratio, 0.80 times on 2018 and 1.05 times on 2017, also better on 2017. For leverage ratio, both debt ratio and time interest earned are higher on 2018 than 2017. For debt ratio, 39.44% on 2017 and 43.34% on 2018. On 2017 is less riskier and carrying little debt than on 2018, while for the time interest earned on 2017 is 5.9 times and 6.99 times on 2018, which in this, Sunway Berhad on 2018 can handle better debt repayment than on 2017. For activity ratio, the inventory turnover ratio on 2018 is more 0.02 times than 2017, which is 2.03 and 2.05 times, indicates that on 2018, Sunway Berhad has better sales than on 2017. That is, total asset turnover from 2017 to 28 is decreasing from 0.55 times to 0.27 times. On 2017 is more efficient. It is at generating revenue from assets. Lastly is the profitability ratio. The net profit margin on 2017 is higher, which is 20.60%, compared on 2018, 13.46%. Okay. 2017 has efficient management that able to effectively control its costs and provide goods or services at a price significantly higher than its cost than on 2018. Lastly, the return on asset on 2017 to 2018 is decreasing from 3.62% to 3.47%, with a differences of 0.15%, showing that Sunway Berhad has lack of efficient in generating profit in both years.
Ratio from 2018 to 2019, the liquidity ratio, current asset in 2019 are slightly increased from 1.01 times in 2018 to 1.03 times. This indicates that the company can survive slightly with the short-term creditor that covered by the current asset. Quick ratio in year 2018, Sunway doing better with quick ratio, which is only 0.8 times but slightly increased in 2019 with 0.83 times. For net working capital, the net working capital increased from 2018 to 2019, which is from 72,424 ringgit to 284,931 ringgit. For activity ratio, inventory turnover, the company is performed well in 2018, which is 2.05 times rather than 2019 1.56%. We can conclude that the company is having a productive stock in 2018. For fixed asset turnover, we can clearly see that Sunway Berhad company doing well in 2018 with fixed asset turnover 8.74 times rather than 2019 with 5.22 times. We assume that occurred because sales and net fixed asset of the company increased. For profitability ratio, operating profit margin, the higher the OPM, the better or more effective the Sunway Berhad generating profit after deducting operating expenses. The company operating profit margin increased rapidly from 2018 15.71% to 19.14% in 2019. For return on asset, the return on asset increased slightly in 2019 with 3.55% from 2018 with 3.47%. This shown that in 2019 has the better or more effective for Sunway Berhad to generate the net profit using total asset. Last is return on equity. The ROE in these years is increasing 0.22% with 2018 reached 8% to 2019 reached 8.22%. The highest ROE in between these years is in 2019 with 8.22% and keep maintaining the performance for 3 years from 2017 to 2019. For the leverage ratio, debt ratio for 2018 to 2019 are increasing from 43.34% to 46.2%, which means that the higher the ratio, the more liabilities that the company has than asset. In 2019, Sunway get higher point 11.67 times better than in 2018, 6.99 times in time interest earns, which means in 2019, Sunway Berhad more capable to meet interest payment and can lower risk of default. Next is ratio from 2019 to 2020. For liquidity ratio, the current ratio in 2020 are slightly decreased from 1.03 times in 2019 to 0.89 times. This indicates that the company are less survived with the short-term creditor that covered by the current assets in 2020. Quick ratio in 2020 decreased sharply from 0.83 times in 2019 to 0.62 times in 2020. This means that the company are doing great in 2020. For activity ratio, in inventory turnover, the company is performed in 2019, which is 1.56 times rather than 2020 1.25%. Inventory turnover is in 2020 is lower because this company take a low risk strategy as there is a low chance of stock out to meet the production and sales needs. For total asset turnover, we see that the total asset turnover was decreased in 2020 with 0.18 times from 2019 with 0.23 times in 2020. We can say that Sunway company can operate with fewer assets than a less efficient competitor. and so requires less debt and equity to operate. For profitability ratio, operating profit margin decreased massively from 2019, 19.14% to 13.39% in 2020. We can conclude that in 2020, the company cannot generate profit after deducting operating expenses well. Net profit margin, the higher the NPM, the better or more effective Sunway Group generating net profit. In 2019, the NPM decreased to 15.58% in 2020 from 70.5% in 2019. Return on asset, the return on asset severely decreased in 2020 with 1.64% from 2019 with 3.55%. This shows that in 2019 has the better or more effective for Sunway Berhad to generate the net profit using total assets. For leverage ratio, debt ratio for 2019 to 2020 are decreasing from 46.2% to 37.64%, which means that in 2020, Sunway Berhad has more assets than liabilities. In 2020, Sunway get lower ratio, 5.03 times lower than in 2019, 11.67 times in time interest earns, which means in 2019, Sunway Berhad more capable to make interest payment and can lower risk of default.
Next, I would like to discuss about the comparison of ratio analysis between the year 2020 and 2021. As we all know that COVID-19 has affected all sectors all around the world. Our economy had going down badly. So, we start first with liquidity ratio. Current ratio in 2021 is higher than 2022, where the higher is better. 0.89 times is on 2020 and 1.19 times is on 2021. That means the firm can cover short-term creditor by using the current asset. For leverage ratio in 2021, get lower that ratio than 2020, which is at 26.74% from 37.64%. As for your information, higher ratio normally indicates higher financial risk. So, this firm get lower financial risk on 2021. Next is activity ratio. For inventory turnover ratio, they get different 1.25 times and 1.20 times. What higher is better in 2020? Next is profitability. Net profit margin shows that 2021 did not perform well. That means the firm did not get higher return. Next is return on asset. Higher is better. The higher ratio is to control the cost in its operation.
For improvement in recommendation, for the improvement of activity ratio, Sunway Berhad, it shows company have low in inventory turnover. Inventory turnover is important because it highlights how efficient a company is at converting inventory into final sales, and therefore much needed cash. A low turnover implies weak sales and possibly excess inventory, also known as overstocking. It may indicate a problem with the goods being offered for sales or be a result of too little marketing. I think they should improve their sales, which is increase the average collection period. If a corporation fails to generate sales, it will eventually lose money. As a result, the company must increase the average collection period, or those business will lose more money. Next, for the improvement of profitability ratio for operating profit margin, Sunway Berhad has low profitability in overall, either in on operating margin, net profit margin, return on asset, or return on equity. Profitability ratios measure a company's ability to earn a profit relative to its sales revenue, operating costs, balance sheet, assets, and shareholders' equity. These financial metrics can also show how well companies use their existing assets to generate profit and value for owners and shareholders. The part that they should concern more is inventory management. Improve inventory management by conducting daily inspection every pre-opening, shift change, and closing time. Good inventory management will help to make better decisions around purchasing, sales, and marketing, allowing to sell more products and reduce the needs for markdowns. Lastly, the improvement and recommendation for debt ratio. Sunway has increased their debt ratio from 2017 until 2019 and rapidly declined until 2021, which is a good sign for the company, as the lower debt ratio usually implies a more stable business with the potential of longevity, because a company with lower ratio also has lower overall debt. But Sunway Berhad is still not in the safe place, as the reasonable benchmark of debt ratio is 0.5. On this part, they should improve their debt management to reduce the potential loss that may occur in the event of liquidation. Depending on terms and type of debt, the company may be able to retire some of it, lowering interest payments and all else being equal, lowering the company's debt.
In conclusion, Sunway Berhad have good performance for liquidity ratio and leverage ratio, while the others ratio did not perform as it should be. The company only achieved the ability to meet maturity obligation, reduce the ability to service debts, and reduce the degree of financial risk. On the other hand, Sunway Berhad cannot effectively manage their profitability and overall result, and lack of effectiveness in managing assets and efficiency in handling operations. For comparative and common size analysis, the company showed an average performance for 5 years result from year 2017 until 2021. There are a lot of things that need to be improved by the company to ensure their financial position and performance will be better in the future.